Hello, everyone. My name is William Mucker. I am a client executive with Chemiplan, and I would like to thank you all for joining us for today's webinar, Precious Metals and the New Market Reality for 2023, with John Byrne, Precious Metals Account Manager and Trader with Neptune Global. I'd also like to thank you for joining us today, John.
Thanks, Will. Great to be here.
Of course. As a quick note, please be aware that John will be answering questions at the end of the presentation. However, feel free to use the Q&A function on your screen, not the chat, to pose your questions whenever they cross your mind. Another note is this is a rescheduled webinar that was initially supposed to take place in December of 2022. So there may be some things, I know a lot of it has been updated, but some things may be related to December of 2022. Before we get started, I do have a brief disclosure to go through. Everything presented in today's webinar is strictly for educational purposes. Chemiplan is a neutral third-party administrator of IRAs. We are not attorneys, CPAs, or financial advisors. If it comes to a time where you need advice in any one of those fields, we highly recommend you consult with your team of professionals. We are more than happy to be a part of that dialogue with your team of professionals to make sure the investment process is quick and seamless. We do not sell any investments at Chemiplan, nor do we endorse any products. We will never call you about the next best investment opportunity. We believe that you should always do your own due diligence before investing your money, whether it be your retirement funds or otherwise. Once you have found the investment that is right for you, we will help you open your account, fund that account, and facilitate the transaction into that investment. Here is my contact information. If you or anyone that you know who you believe can benefit from the information have any questions about what is discussed in the presentation today and how it applies to self-direction, please do not hesitate to contact me. I would be more than happy to help. And without further ado, I'll pass the controls over to you, John.
Thanks, Will. Let me just share screen here. All right. Well, thank you for joining Precious Metals and the New Market Reality going into 2023. My name is, Will introduce me. It is John Byrne. And yeah, I very much appreciate everybody's participation here. So let me get right into it and give you a little company introduction first. We're headquartered in Delaware, which is also where we store our clients' metals for our clients who do choose to store rather than take delivery of metals. We were established in 2002, so a long track record in this field. And yeah, we are a full-service precious metals dealer trading in all types of bullion, bars and coins, gold, silver, platinum, and palladium. And in addition to that, we are a developer of innovative and patented precious metals investment assets that will help with diversification and precious metals premiums reduction. So we'll get a little bit more into that section towards the end. And it's also worth noting, we have been featured, both our company and our founder, Chris Blasi, have been featured in Forbes, MarketWatch, Barron's, Wall Street Journal, Investors Business Daily, CNN Money, CNBC, Dallas Morning News, Financial Sense, and yeah, I think I got them all there. So, and again, as of 2022, we had celebrated our 20th year in the business. So it's been a great road, and yeah, future looks bright ahead for precious metals and for Neptune Global. And we have our own little disclaimer written on the bottom. Our presentation here is informational only, and it does not constitute any investment advice. We are not financial advisors, and please do your own due diligence before investing in anything. Move on to the next slide here. So what we saw in 2022, and what this is basically a retrospective on 2022 with a look towards 2023. And about a month and change into this year, it's apparent that just about everything that had gone on in 2022 in terms of turbulence, both geopolitical, financial, basically everything, economic, is still happening right now in 2023. And we'll go into it here. So for starters, let's look back on where it all settled in 2022. Equity and other markets are pretty heavily and deep in risk-off mode. Now, some of those have bounced back to some extent, but it's not particularly significant so far. Now, we are facing significantly higher rates in response to inflation, and the inflation fight continues. And yeah, there's always plenty of talk and markets lurch from headline to headline on inflation and the Fed's response to inflation. Is it too much? Is it not enough? That kind of thing. We have a deeply inverted yield curve in US Treasuries, with the high point of the yield, I believe, being the 6-month Treasury bill, and then it inverts from there as we go out the full spectrum of the curve out 30 years. We've been watching almost a year now of war between Ukraine and Russia, and it's absolutely thrown a ton of turbulence into the energy markets, and it does not appear to be de-escalating in one bit. Now, this has all caused all manners of global diplomatic, trade, and financial realignment to start, and we'll see more of that. Now, what was discussed as an alternative to gold for a long time, crypto, has definitely been thrown on its head, and we'll go a bit more into that. And we're also seeing very much a softening domestic real estate market in many areas, both residential, commercial, manufacturing. It is indeed troubling. So let's take, Now we also have, and this is important in our discussion on cryptocurrencies too, and precious metals for sure. There's more and more chatter out there, and it is resonating louder on governments executing central bank digital currencies. In other words, electronic money delivered right to you, and everything that goes along with that. And it's interesting to see this develop and what it means to investors. And another thing that has characterized much of 2022, and this is a direct response to interest rates, is a stronger dollar. But that's basically a relative value here versus other currencies. And as we see with inflation, it does not in and of itself equate to consumer strength when it comes to the dollar. We're also we have seen in 2022, government's efforts to phase out fossil fuels and all the baggage that comes along with that in the US, Europe, and other places. So there's a big shift in energy markets that's kind of taking place, but are anyone's economies, supply chains, and manufacturing bases really equipped for that? It's a great question there. And then also midterm elections came, and they have ushered in gridlock as the Republicans have taken the House from the Democrats. And again, inflation. What we see for inflation, what we see reported for CPI, for PPI, doesn't really tell the story. And again, here we go. What to expect in 2023. All right, we're still, like I said, that war in Europe, in Eastern Europe, has not de-escalated. If anything, it seems the opposite is going on. The Fed continues to find itself wedged between the consequences of raising interest rates or deciding not to. In other words, do they raise interest rates to fight inflation and jeopardize risk assets in the economy? Or do they choose not to and see where inflation takes us? So this is very, very important. Again, as we lurch from inflation headline to inflation headline, this is the dilemma right there. And again, turbulence in energy markets, cold months, we're especially sensitive to that with gas prices, natural gas prices, that is. And we've seen more stock and other asset market volatility. And earnings are a very big question right now. We've seen recently, in fact, some good, some absolutely terrible. Amazon, notably bad. Others, okay, but it's also a question of expectations. Are expectations for earnings being dumbed down in this economy? And outside of Eastern Europe, US-China relations appear to be not on the mend at all, between trade issues and the big Taiwan question there. And the geopolitical realities are definitely rearing their head this year, just as much, if not more so, than last year. And again, after the midterm elections, which are just another manifestation of adversarial politics in the US, what's that going to bring us? And it also, at the end, it begs the question, where do you turn as investors? What's the best place? What is safe? And that's what brings us here today. So in terms of the value prop of gold and precious metals in general, a great place to look, for starters, is to world central banks. And their purchases of gold have gone up dramatically. 2022, world central banks bought a total of 1,136 tons of gold. which is a little over 1.5 times what they purchased in 2021. And it's the highest since 1971. So it's very telling. So you look at a lot of media sources will tell you they'll poo-poo gold and dismiss it as a relic of the past, but central banks appear to think otherwise. And now also we're looking at the US dollar. Its status as a reserve currency is definitely diminishing. You're seeing more and more talk and more concrete negotiation in eliminating it as the petrodollar, so to speak. So what was always basically a constant bid under the US dollar, because that was the currency to purchase oil with, that appears to be in jeopardy here, especially between Saudi Arabia and the Gulf states and a colossal buyer and user of petroleum products, China. So that's something to very much keep an eye out for and to watch. And it definitely looks, again, central banks are buying gold. So look back on that and look at these headlines, and it's very telling. And that's just one way the dollar strength can diminish, the petrodollar. And you're seeing, inflation eat away at the value of the dollar on a granular level, on a consumer level. Post the beginning of the Russia-Ukraine war, you're also seeing countries decoupling from the global SWIFT payment system. And that's, some of them forcibly, others voluntarily. So another US dominated world payment system there is definitely losing its luster. Now, going back to the Fed here, if a Fed pivot, basically, backing away from fighting inflation, more or less, or taking their foot off the gas pedal of raising rates, that has its own risks. Now, a big stock market pullback definitely will, you look back at precious metals as a more stable, more established way of investing. So keep an eye on that. And a great way to think of gold in particular is as an exchange rate. Think of it as currency. Think of gold as money. So that's very important when you look at especially price movements in the precious metals. In other words, and also gold exists outside debt creation, and a lot of what has fueled these asset markets has been low rates and debt creation and debt perpetuation. And this is these are the risks of fiat currencies in general, especially the way things have gone in terms of running up these debts and running these deficits over the past decades. And in this environment, we're seeing a rediscovered appreciation for the metals and their role in a portfolio, their role as a safety asset, their role as a diversification tool, and again, just that general value prop as something that's away from all these risks that we're seeing now. So it becomes a matter of let's see, why are precious metals so unique and so well suited for today's world? And we'll go through the list here. First off, they're liquid. Precious metals are some of the most liquid assets in the world, very easily converted back into fiat currency. They're portable, so they don't take up a ton of room, unlike, say, real estate, things like that. Divisible, evenly divisible in very universal sizes, ounces, kilograms, things like that. And they've been globally accepted for 5,000 years. So it's been gold and silver, to an extent, have been essentially money. And it's important to look at it in that fashion. It may not in these days be tied to fiat currency in the US or anywhere else at this time, but it has been a medium of exchange in the past. So it's time tested, and there's no counterparty risk. There is you and there's your metals. There's no exchange in the middle. We'll go a little bit deeper into that in a second. So looking at counterparty risk, all right, let's look at all these assets. Is there counterparty risk with stocks, ETFs, and equity mutual funds? Absolutely. You have a manager in there. You have an exchange in there. In terms of ETFs, we always get questioned on the value of physical precious metals versus ETFs. Now, it becomes a matter of, in an ETF, you will own shares in a trust. You will not have direct ownership of your precious metals. Stocks, there's exchange risk. Mutual funds, you have an investment company managing a portfolio of stocks or bonds, what have you. Bonds, Counterparty risk in bonds. You as a bond investor are a creditor, so keep that in mind. And same thing as fixed income mutual funds. You own a portfolio of bonds, so there is absolutely counterparty risk for the same reason there is in bonds themselves. Real estate and REITs. Now, real estate's an interesting one. You buy real estate, if you become a landlord, rent it out, you have colossal counterparty risk and your tenant's not paying you. And in this day and age, your redress for that is very much limited, it seems, especially since COVID. Also, taxation. Taxation is a big issue in real estate. Just owning it, you will be taxed on the property. And any leverage you utilize in your real estate purchases factors into that greatly. Mining shares. Mining shares are often discussed in the same vein as the precious metals. And in some sense, it's a way of getting at kind of a juiced up precious metals risk in either direction. But at the end of the day, you own operating companies, not the metals themselves. And the particularities in any operating company are going to be leverage. And in the case of mining companies, where are their projects? M&A, how well are they doing? Are they, are their books in order, these mining companies? So it's a way of essentially tracking precious metals risk, but it's entirely different as well. And again, we went through at the beginning, gold and silver ETFs. There is counterparty risk there. What do you really own? And if you look in the fine print of a lot of precious metals ETFs, you will see that they reserve the right to engage in the derivatives markets, especially futures and options. And also at the end of the day, again, you only own shares of a trust. Some may have delivery options that are onerous or especially large and are, quite frankly, never really exercised. So why go through the trouble and just instead invest in the physical metals themselves? And getting to number 6 here, physical metals, direct ownership. There is nothing in between you and your ownership right there. Yep, that is it on that. And I will go to the next slide. Now, we can't really discuss counterparty risk without a pretty deep dive into cryptocurrency. So the past 4 to 6 months or so have been very, very telling on cryptocurrency markets running amok. And it has led in 2022, especially, you look at Bitcoin, let's take a look at Bitcoin. It was, I think, 69,000 or so. And I believe it ended the year closer to 17,000. It's up a bit now. I want to say 23,000 or so. But going from 69 and change, 69,000 odd, down to 20 some odd thousand. That is a colossal drop. Absolutely outsized. And that's just Bitcoin. That's the flagship cryptocurrency right there. You have massive exchange risks, the FTX scandal and other exchanges in trouble, supposedly. Those are very telling. And, it's worth noting that, it's such a new market, and essentially in crypto, there's nothing physically owned. There's nothing tangible owned. And there's a massive, massive counterparty risk involved in crypto investing, in that to exist, and certainly to be worth anything, but just to exist at all, you need a functioning internet out there. So keep that in mind. Cyber incidents that we hear, blackouts, any instances of potential instances of cyber terrorism, things like that. It's easy to think that could possibly jeopardize any crypto investments an investor has. And here's another thing, there are some operations that will accept payment in basic cryptocurrencies these days, but it's uncommon. It's really pretty rare. So any kind of get out of cryptocurrency, unless you buy another cryptocurrency, sell one, is the off-ramp. So one of the great one of the big talking points of cryptocurrency revolves around it being a kind of rebel currency. But to do anything with it, you need to take that off-ramp into fiat currency, into US dollars or whatever currency. And that is from a privacy, from a privacy standpoint, and from again, that whole notion that it exists off the grid. But to do anything with it, anything substantial, you need to go into an actual fiat currency. So that is, to me, detracts from its overall value proposition. And going back, central bank digital currencies. If central bank digital currencies roll out on a wide scale, it's very easy to wonder whether governments are going to allow competing currencies in that sphere. So, if central bank digital currencies come around, will they allow competing currencies to exist still? That's an existential question in terms of cryptocurrency. There are major barriers overall in crypto's viability as an asset class with all this in mind. And that said, in terms of price action, the just price action, never mind all the other points. The idea that Bitcoin is going to replace gold seems, especially after 2022, definitely that talk has not aged well, not in the least bit. Actually, along those lines, last year, and you can find this on our website, we did actually a very kind of an expansive comparison and contrasting of gold and crypto. So if you want to check that out, that's on our website. You can download it. There's some good stuff in there, and I highly recommend anyone interested in this topic to check it out. And let's take a look at gold. And this is outside of metal circles, this is not the most well-known stat right here. This is gold's performance over 20 years versus the Dow Jones, and a little under 350% overall return for the Dow, and between almost 450% for gold. Very few people will tell you this. You don't hear about it in the mainstream media. You don't hear about it certainly not in the financial media much, but it's very telling, and it's a great thing to take a look at when you're thinking of, okay, what's gold worth? What has it done? And how can it possibly help me? Now, we looked at crypto, and let's look at what gold did in 2022. Now, keep in mind a few things. All right, so we see this chart here, courtesy of the World Gold Council, and gold largely finished flat on the year. Now, here's the thing. We talked about a strong dollar earlier, and that actually has, for US dollar investors, that has taken away from gold's return in 2020, and it did in 2022. And essentially going back to that exchange rate model, think of gold as an exchange rate. With a stronger dollar, it took less US dollars to buy gold. So the gold price did not go up. Now, we talked about how we basically lurched from Fed headline to Fed headline about inflation fighting. And for a time, there was a perception in the markets that the Fed was effectively fighting inflation, and that kept gold flat for the year. The market perception that the Fed was doing its job. But the question is, can they continue to keep doing that job well, or are they going to go too heavy in one direction or another, and taking their foot off the pedal, or in raising too hard? So that's definitely an important point to bring up. And if you look at gold's performance in, say, euros or pound sterling last year, you'll see it went up. So a lot of this was very much a function of a strong dollar, which kept gold largely flat on the year. And a question we always get, and it loops back, is, why was it not up significantly given the inflation we saw? And the market effect, the market perception was that the Fed was effectively fighting inflation. But how much faith do we have in the Fed to continue doing so again? And even at flat for the year, its outperformance versus stock market indices is profound. So we'll get to that in a second on a chart on what the S&P 500 did last year. Now, again, the perception is that the Fed has been effective, but how can it continue to be? It's facing the possibility of moves it making the wrong move with inflation versus deflation. Will they do the right thing, and where will this lead? And, taming inflation requires aggressive interest rate hikes, and the economy does not like that, especially an economy very much used to cheap money. And cheap money, taking away cheap money with aggressive interest rate hikes is very destructive for stocks, real estate, markets that function on high leverage. which those are. And yeah, a strong dollar will make U.S. exports more expensive abroad. So U.S. multinationals having to charge more for their products effectively based on a strong dollar is not helpful. Not helpful to U.S. stocks, not helpful to the U.S. economy. So, and keep in mind, in terms of what faith do we have or should we have in the Fed, they are basically political appointees. So it makes for very, very difficult choices all around as investors. But time the gold value prop, the metals value prop is indeed time tested. So here's our S&P 500 chart. So keep in mind, gold flat for 2022, whereas the S&P 500 was down about 21% on the year last year. So that is the diversified broad market index right there. If you look at where a lot of people are positioned in their stocks, look at the NASDAQ 100, its performance was dramatically lower on the year for 2022 than what you're looking at on the S&P here. So this is very much something to keep in mind. Gold flat versus stocks having been beaten up pretty hard last year. Now, in terms of an overall look at precious metals, we'll also look here at silver. Silver is always mentioned in the same conversation as gold. It has, in a sense, and we'll see a chart momentarily, its price movements tend to follow along with gold, but in a more volatile fashion on account of its lower dollar price and its industrial usage beyond what gold's is. We have green solar power. So the future of silver, the future of solar are tied together at this point. Jewelry, of course, and yeah, and we have, it seems like not a couple of weeks go by where we see another headline about the overall COMEX supply of silver out there, of physical silver, of that supply dwindling. So there are definitely interesting points of conversation out there revolving around supply and scarcity, possibly in the future. And platinum and palladium are two precious metals with very, very major industrial uses, such as catalytic converters. That's the big one here. Now, we've seen a big push for electric vehicle usage around the world. And there are challenges to that. There are challenges to that in terms of mining the battery metals, and in terms of price, and in terms of overall speed of adoption and what can power grids handle. So catalytic converters do not appear to be going anywhere. In other words, the combustion engine does not appear to be going anywhere anytime soon. Electronics is another use case for platinum and palladium, as well as jewelry. And platinum and palladium especially have a very big scarcity in terms of geopolitics. South Africa and Russia account for the lion's share of both of those metals. In terms of Russia, Russia is 40% of the palladium market. So, and tie that into all the geopolitical turbulence based around Ukraine, and it's very interesting indeed. And to point back to go back to the gold silver relationship, this is the how the two of them traveled together largely, in 2022. So you definitely see a relationship there. But like I said, silver will have a more volatile in both directions, volatile price action than gold will. Give me 1 second. Now, we had mentioned early on that we have innovative and patented products, and our flagship product is the PMC ounce, which is a physical combination of gold, silver, platinum, and palladium. And it's held in a fixed ratio. Now, having those four metals in the same product in the ratio in which we have them has led to an outsized return versus any one of the metals. So this is something to point out here. This is our patented product, and it is, it is certainly proven. So you get a bit in one product with a low dollar price, you get exposure to all four metals. So if you ever wanted to check that out, you'll be able to find more details on the website, and you'll be able to call us as well. And and overall, to conclude, and we've seen market volatility and turmoil that has not been seen in a long time in 2022. And all the factors that contributed to that are not behind us by any means. And we see a Fed that seems to be very much committed to going after inflation still. but at what cost? Can they bear that cost? Now, there's also no end in sight to geopolitical stress and the commodity shortages caused by wars, by big structural changes in world economies. And it appears that those are only beginning. And it becomes a question of how much US dollar strength can weather this, especially in regards to the diplomatic and geopolitical realignments, with the US dollar, with a possible petrodollar in jeopardy, as we've seen. And precious metals, the value proposition is time tested. It's thousands of years old. It exists outside of the fiat bubble economy. And it's been tried and true, a place to turn in times of turbulence. And looking at gold in particular, central banks the world over continue to buy gold. Record year since 1971 and 2022 alone. So it begs the question of why shouldn't investors consider it as well? And yeah, again, you'll see some info on our PMC ounce and other products on our website. There are downloadable fact sheets available there. And we also have a mobile app to keep track of metals pricing. There are some cryptos priced in there too for good juxtaposition. You'll see some market news alerts on there. That is available on the Android store and the Apple App Store. So you can absolutely download that anytime, and it's very handy, and we very much appreciate that. You can be contacted. Our contact information is on here, and you can reach out to us via our website or via phone anytime. And you'll also see us mentioned in Jim Rickard's publications, who has in the past promoted the PMC ounce and has recommended it, I believe, in his New Case for Gold book in the past. So please, give us a call, any questions, and we very much thank you for tuning in. And definitely, thanks for tuning in. And I guess we're about to open it up to Q&A here, right, Will?
Yes, sir. Thanks for the insight into the precious metals market and the outlook for 2023. If anybody has any questions for John in regards to precious metals, or even for myself in regards to self-direction, please post them in the Q&A now, and we'd be happy to answer them. One second. So while people are getting their questions ready, John, what is your experience with precious metals in an IRA? What are the benefits and downfalls to that?
Absolutely. In terms of benefits, it provides access via investable assets that might not otherwise be there. Now, Neptune Global handles IRA assets and cash account assets as well. But in terms of it opens up an avenue that otherwise wouldn't be available to many investors. And it's the overall retirement account benefits apply to precious metals just as they do to other assets. So it's definitely something to consider. And in terms of overall, in terms of downsides, any asset has risks for sure, but physical precious metals in an IRA is definitely one way to plug that gap in an otherwise, in a portfolio that needs that diversification.
Thank you for that. It looks like your presentation was so comprehensive that it left no questions.
I guess that's great. Fantastic.
All right. Well, thank you, John. Thank you to the folks at Neptune. If you have any questions about precious metals or the PMC ounce or anything like that, please feel free to reach out to John or the good folk over at Neptune Global. If you have any questions about how it applies to your self-directed IRA, feel free to reach out to me or Camaplan at any time. And we appreciate everybody who attended. And I hope you, John, and everybody who attended have a great rest of your day.
Thank you. You as well, Will, and everybody else.
Thanks.